and we have the management of Emami joining us on the show right now. We have Mr. NH Bansali, who is the CEO of Finance Strategy and Business Development, as well as the CFO of Emami. Very good morning to you, sir. Thank you so much for joining us on ET Now. And let me first begin by talking about the summer season. It was strong summer season sales for your company. But how has the demand been now, and how's the
products are performing as per the expectations? The oils and the cool talcs and the prickly powders are doing reasonably well. Compared to the previous year also, there has been a good growth in Navratna oil or the recently acquired Dermicool talcum and the Dermicool talcum there. So all the summer products are performing very well. In terms of the rural and urban, yes, still there is some slowdown still continuing in the rural, but overall the trajectory appears to be good. The way it is performing, we expect that the growth from the ground level would come in the coming quarters. Despite this, our growth had been very good. If you look at, we have delivered an 18% overall growth from domestic, international, all taken together.
Bansali, Alex also joining in. Just want to understand on the margin front. This is something broadly industry is talking about. There has been significant pressure on the margins. In the quarter gone by as well, we saw contraction for Emami. A lot of people are saying in Q2 as well, they're expecting margin pressure on account of raw material costs. Do you anticipate that that will continue in the second quarter? And what is the expectation that we can see of a tapering off in the costs?
So the first quarter witnessed 340 basis point reduction in the gross margin. That was led by COGS increase. And we expect this will decelerate, and over a period, the year end, we do not expect a cost increase of more than 200 basis points. So going forward, the costs are expected to reduce from this level. This also has to do something with the product mix which we had. You see, in the previous quarter, same period previous year, the immunity products and the pain management had a larger share, and this has reduced because of the threat of COVID having been reduced, and the consumer preferences have changed. But and so it had an impact because there were the high gross margins there, and so that also had some impact on the COGS. And so we expect the COGS to get moderated in the next 3 quarters, and the year end COGS would not be more than 200 basis points compared to the previous year.
Right, Mr. Bansali, so that brings me to my next question. One is, what sort of a guidance have you laid out for the company or outlook for the company for FY23 when it comes to revenue? And also, if touching back to that margin question, is there a number, ballpark figure that you all are eyeing for FY23?
Yeah, we expect a good double-digit growth overall for the company for the FY23. And definitely there would be some pressure on the COGS, because if you look at, we always deliver the highest gross margins and the EBITDA margins in the industry. So our last year EBITDA margins were at nearer to 30 basis point, 30% EBITDA margins. And we expect the EBITDA margins to correct, but despite this, because of the overall top line growth, there would be we expect marginal increase in the EBITDA, in absolute EBITDA for the year, despite increase in the COGS, and also because of our investments, aggressive investments behind the brands, and also because of the normalization of the activities post this pandemic. All taken together, we have taken many cost reduction initiatives, and all that is going to pay for us, and EBITDA growth would be positive.
Bansali, thank you so much, and wish you all the best for the current quarter and also the quarters ahead. All right.